Good morning, traders, and welcome to the All Markets webinar. This is Bruce at Bookmap. Sorry for being a bit late in here on another call that ran over and could not get out of it on another. Anyway, so let's just jump in right away and see what's going on in here. We'll go through the disclosure in just a minute. Looking at the order flow immediately in here. Kind of interesting order flow. You can see the cash open and this kind of quick move up. Pulls right back into the range and retests though the open basically, and then now we're back up again. And let's read what's happening here. So is this the kind of breakout we're looking for? Well, to me, looking at all of this volume in here and reading this in here, this is a pretty strong move here on the buy side, and we're still seeing some buyers up here. So yeah, I would look for this to break. Now, I just don't think it's high probability though. Still though, we're going to go through and give our assessment based on what we do know. There is volume building here. On the buy side, it is auctioning up here. So we are looking for this to break. Now, that said, we've seen this so many times, you might just get a peak above here and then it slams right back down into like these ranges in here and some of these swings, and then maybe even further down, and then it climbs all the way back up and then breaks out. All right, so we're not looking for this to break out immediately, basically. If you do look for that breakout trade and it starts to look pretty good for you, then it would be very, very tight stop because you're really not looking for like this really strong move up into like 66 or 70 or something like that at this time. So there's liquidity up there at 66 and 70. I mean, that's what we read right now. Just based off of all of this in here, we could see this move back down. That's what I'm trying to say. Now, all of this said, note that this is rollover period. Okay, we mentioned this on Friday. Good morning, Alois. You can see it here in the S&P. Now, I'm actually on the H contract here. All right, now for those of you who aren't familiar with the futures rollover, please just bear with me for a moment here. This is the Z contract here. It actually has more volume trading on the Z contract still. But look at the liquidity heat map in here. Okay, so note how it looks pretty odd. You can see all of this liquidity that's very close to the market. This is because of the condition of the rollover period. Larger players are rolling from one contract to the next. And we can see that from the Z to the H contract. Now, this is a quarterly contract. It's different than gold or crude oil or coffee or wheat or whatever it might be that other markets that you're trading. Anyway, this is a kind of a difficult time to trade. So keep that in mind when you're looking at some of the order flow in here. It's difficult because the participants' behavior is different. A lot of players are going from one contract of the December contract into the March contract. So that behavior is different, and you can see it in the order flow very clearly. Right, so that just be aware of it. Maybe you're hedging, or maybe you're looking at some swaps or something between front and back months. That's great, fine. This is a great period for that. So it's something to look into if this is a dead period for you. Anyway, our job in here is to read the order flow and look for some sort of edge within the market here. Let's see here. All right. Yeah, so we can see it just kind of peaked above and we're back into the range here. Yeah, just not really sure what to think of it right now. Not really getting much of a read. So maybe the sellers come in and we come back down to not only this swing here, maybe down into this swing or down here, 57, 60, somewhere around there. Just kind of back and forth at the moment. All right, so we did get a little break above and then back in the range now. Yeah, please just be aware of this. If it looks really, really good, that's something else. It was looking just okay, and we leave it at that. Let's jump into the higher time frame here and take a look and what's going on. So daily over here on the left in the candlesticks, in the middle we have the 1 hour and then the 15-minute on the right. Okay, so you can see the daily chart here. We see the move on Friday in the breakout and close above all of this previous range in here. This is bullish, no doubt. We can see that here we're just testing those highs, are we going to break above and continue on? I mean, this has been extremely bullish here. Looking at this chart on the daily, and we know we had a lot of fundamental news in here, so that's what's been driving this market. Anyway, you can see that like last week, different fundamental news. We did have the non-farm and the move up here on Friday. Looking at the hourly in here, you can see it's pretty choppy in here, and a lot of back and forth, gaps, etc. But this is where we're hanging out up here above. Near these highs. 15-minute chart, there was a small gap. You can see here, this is the regular trading session. It's filled that gap and then some, has come back up into this kind of previous cluster up here, and you can see a bit of a pullback at the moment. Okay, but it looks like there's a bit of momentum here on this 15-minute chart. You can see the last 3 candles here. Well, there's pretty big wicks on it, but they're all green, and they've been going to and making higher highs in here. Okay, so some back and forth, but it is all green. All right, so that's why it kind of matches what we were talking about here in the order flow as well. That we're looking for maybe a slightly a move higher in here, looking at this strong move in here after the open, and really choppy in the open here. Up, it's down, it's down, it's back up, and then we have this move to the downside and then a move right back up. This is the stronger move here. Okay, we can see for at least for this regular trading session here. Okay, so here's our pullback. Now, do we see the buyers come back in? Okay, boy, I'm not seeing much at all at the moment. So nothing doing. Let me jump back in here and take a look at chat. Okay. Okay, so KP, I checked it earlier this morning on the Z contract versus the H. So it looks like it's probably rolled here. Let's take a quick look on CME. It's a really funny thing. It is. I'm rather fascinated by it. Let's see here. All right. So you can see that they've actually signified here from the CME group website that this is the current contract, the H contract. But let's scroll down though and look at the details here. Okay, so here's our December contract. Here's our March contract, yeah, to me it still looks like there is more volume on the December contract. It's up to you guys, whatever you feel comfortable with. If you wait for the volumes to roll, if you wait for the open interest to roll, well, that has rolled already. You can see that right here. Okay, you can see negative 405,000 here, and then with a positive 460,000 in the new March contract. So this is new open interest here. Okay, or this is the change in open interest, I should say. All right, so yeah, I'll be honest, like I just go with whatever I can read better in the heat map. Many times in the past, it has been the previous month contract or quarter contract. This one, though, does not look very good to me. So I'm going with the March contract. Right, this looks cleaner to me, and it gives me more insight. And that's it. It's as simple as that. Okay, so I know a lot of other traders, like they don't want to trade old open interest. They're interested in trading the new open interest. So it depends. Or a lot of other traders, they just wait for the volume to roll over. Right. So whatever floats your boat, basically. Yeah. Thanks, Rob. So you can see the contrast there between the two. Yeah. Good one. So if you guys want to come over to the Discord channel, you can see it in here. Rob just posted this here. Here's the Z and here's the H right here. Okay. All right. Well, yeah, nothing shaken still. This was looking pretty decent. I think when we started this webinar, it was looking pretty good for this move higher into 66 and 70. But we're, due to the things we mentioned, we weren't quite looking for that. And thinking that, due to not only the volume and the order flow, but also being rollover. We're not looking for that strong breakout move right now, just maybe a peak above and then maybe the move back in. And then here's another move above, and look at this. It's horrible. It's selling up here. Okay, very little buying up here. It's a double top as well. It tried twice, 3 times, in fact, maybe more, and nothing. No buyers in here. That's where we look for the sellers to come in and then to drive it back down into these areas here. Okay, so we do see that it's at least driven it down into this little nook right here. These are things that we mentioned the past several webinars of these. Like this is kind of a mini flag pattern right in here, and I again cringe to call it that. It is more of a strong move now relative to this small little area in here. And then kind of a pause and then another move. Okay, so that's what we're looking at. Now it's not relatively in this little area in here, it's the stronger move. In the bigger picture though, it is nothing. Okay, so just keep that in mind. Okay, so let's see here. Yeah, a little back and forth in here. Still kind of looking for sellers to trade back down to this swing here. And I was kind of surprised to see this little move here by the buyers. But because of this exhaustion up here, this is what, and also you can see high liquidity in here, stays in the order book and fills. Okay, this is where we get the insight. Okay, because you can see these algos that are away from the market by a point or two. And once they see some sort of advantage or someone comes in and just places liquidity and gets filled, that's where we can get some insight. What is the market doing after this transaction here? Okay, so you can see a little bit of buying in here, pull back, and look at the buying up here. It's horrible, right? We would look for sellers to come in and try to trade it back down to here or here. Okay, so that's what we're looking for, basically. All right. One thing I want to mention in here about the some of these moves and expectations is the measured moves that we've talked about many times in the past, and there's reasons why these measured moves take place in the market structure. But I like them. It also gives you a good area to line up your liquidity or your areas where the market can transact. And we've always looked at these little kind of pauses in the market or where the market initiated the strong move. Okay? Or even this could be a smaller strong move in here and the move back to here. Okay, so you can see we got that move to here just below the swing, and then the move back up. Now let's just do a measured move on this. We can just kind of gauge and have expectations that are more in line with what might unfold. Okay, so this is our measured move here. Okay, well, maybe that's even a little too much. Let's just take it from here, in fact. Okay. Now this is where you look up your books and they say, like, you know, you draw the neckline and you're looking for this or whatever. I don't know how much truth there is to all of that, but there are reasons why you do get these kinds of moves. Because those that are involved in the market from this point on are going to feel the pressure. They'll get retested, and are they going to support price? Are they going to be buying here in some of these areas? Right. So this is something to take a look at and integrate into your studies, because if you do see something like the sellers starting to come in and looking for them to break the range, you know, these can be areas to consider managing your trade. Okay, in this case, it worked out pretty well right before it moved back up. Okay, now we're just talking about market structure here, right? But this is something to integrate or consider integrating within your plan. It just makes good sense. So, for example, a lot of times you'll see a break outside of a range and then all the way back to the other side of the range. Okay, like this one did as well. Okay, so here, not a bad place to manage your trade. Okay, so this move has unfolded all the way back down to the bottom of the range. So anyway, just consider some of these things. And what I'm getting at in here is pretty powerful idea about not just managing your risk, but of getting out of trades or placing your stops or whatever it might be, but also for legging in to your trade. So for example, let's suppose that you study this kind of pattern up in here and you're looking for a criteria of, like, here's exhaustion on the retest back up here. You're looking for your sellers in here, you're looking for a break of that, and you start to see that mountain. You're already in maybe here, let's suppose. Okay, or maybe even drew like a micro trend line, you're in up here or something like this. Now, that's not my style quite, but maybe that's something you're looking at. If it is, and you're already in, and you start to see more selling coming in here, you can leverage that. You can scale into that trade and then be aggressive, take some out down at your areas here. Okay, you're not trying to hit a home run, but you're looking for a higher probability. And this is something that us as retail traders can really utilize. This is one of our assets, is to be able to get in and get out very, very quickly when we look for something to unfold that is higher probability. Okay, so when you do see that, this is where day trading has its edge. Anyway, for those of you who are rather new to Bookmap and new to maybe trading, then I would suggest looking into some of these moves to just look for hitting a single and play and managing your risk, because you want to build confidence first, and by being able to get some points and see this happen frequently, then you can start to build your edge from it. Once you've built that confidence and you have some numbers behind what you're looking for, then you can think about the scaling. Okay? And then you can really leverage this, and this is a big edge. Okay? Whereas that would be harder on potentially on higher time frames where you just don't know. Anyway, Just wanted to cover that. Let me know if you have any questions on that. Let me look over at YouTube. Okay, nothing going on over there. No questions. All right, let's see. What else do we have on the agenda today? Yeah, I guess what we can go over is um, here's a potential range bound trade in here. Okay, so what are we looking for in the order flow here? Okay, well, on the bid here, we're getting some buyers in here. Okay, so can the buyers lift it to here? And around this 60, well, we're almost there. Okay, and then maybe they can lift it up to here as well, 63. Okay, so there's the 61 3/4, this swing here, and you could have gotten filled on that and reduced some risk, but you're still looking for a bigger move up to about this 63 or maybe even 65. Okay, it's happening pretty quickly here, but this is order flow. You know, we look for these little opportunities and I have to jump in quickly. And now this is a range bound trade. Okay? And we are going with the stronger move though. Okay, that's one of the benefits here. Stronger move is here. Pullback was below the swing, down to this swing just about, and then we see the buying starting to come in here. Okay, so you could have reduced some risk for 1.5 or a couple points, or look for this the 63 swing here, or maybe you're still looking for the high. Okay, the high is I like this idea. I mean, we've seen this so many times. This move here that really kind of shakes everybody out, and then it's a buying opportunity. And then if we had a strong auction up in here, okay, which we did up here and in here, a stronger option in here, then we can look for the potential breakout up into 66 or even higher, 70. Okay, so something to consider, and you're going with the trend. And that's really the an easier trade is when you're going with the trend. Okay, so one of the things to look for in what we were just talking about in this potential setup here is that we were looking for the breakout potentially, but we noted that, you know, rollover, not really seeing the volume that we're looking for. We're looking for pullbacks, and then maybe the move right back up here. Okay, just like this, and then the breakout. Right, so based on our higher time frames in here, you know, this daily especially, the hourly looks pretty good too. The 15-minute chart, yeah, it's not as good, but I can see this this candle here. It's not bad. And then the order flow in here, well, they got filled in here. That's going to slow it down a little bit, but let's see if there's support on the bid in here, and we still get some aggressive buyers here for that move higher. Okay, it is building here, so is more likely we will get this move up into 66 now. This is a great pattern to take a look at. We've seen it so many times that the market tries, it can't make it. Boy, you can even take the counter trend trade and then look for the move back up into it. Okay, so far so good. Still looking for buyers, looking for 66. Okay, well, that was rather short-lived. Still has the potential here. Let's see if we get our buyers right in this area here, or maybe this right here. Else, we'd be looking for sellers below this area right in here, and then back to the bottom of the range. Here we go. Come the sellers. Well, got up to 65. That was it. Did not get to 66. Anyway, guys, like I wanted to go through, like, we'll clear the drawings here for a minute. A few different things to consider here. Okay, so you may have seen, and slow down, you may not have seen this already. I'm not sure. We have this new tool in here that development was kind enough to make for us. Was this setups checklist. Okay, so this one here is based off of the flag pattern that we put together in the Learning Center. So if you guys go to bookmap.com, and then you go to the More button here, and you go to the Learning Center under Resources, you will find this Strategies and Setups course here. Okay, we only have one right now. We will have a few more end of the month. It's just a continuation pattern. Really, it's kind of a strong move, pullback, strong move pattern, flag, basically. And we go through the criteria, what to look for. Okay, here's the diagram. Here is what it looks like in Bookmap, and then here's your checklist. This checklist that is within this video here on execution is the checklist that is listed here in the setups checklist add-on here, and you guys have access to this for free, right? Also, all Bookmap subscribers have access to this. It's a great tool to keep you out of trouble and look for higher probability trades. Now, that said, I just want to mention this. Some of you were asking me questions about it. It's like, well, this is great, but can I put in my own criteria? Absolutely. Import it here. It's based off of comma separated values. So put together a spreadsheet, or just, in a text file with commas separating whatever it is text that you want, then import it, and it'll pop up in here, and then you can enable it and you can grade it based on 1 to 10 in here. All right, so you have a lot of flexibility with it. And you can modify it. You can use the default here. Let me show you what I mean here. So for example, let's just open up a TXT file. Okay, and we can say strong move, and let's just say strong volume, and strong angle, or high angle, and then shallow pullback. Low volume, And then we can input strong move again. Strong volume. Strong initial volume. How about that? All right. And we'll save this. Okay. And then we'll import. Where's my test? Should be able to import it. Okay, maybe I did this wrong. Oh, I need to save it as a CSV. All right. Can I save it as CSV like this? Okay. It only imports this. Okay. Well, you guys get the idea. Perhaps I need to do one more thing in here. Anyway, like play around with this. Find your own criteria is the point. And this can be a really nice tool to keep you away from some or keep you out of some bad trades. Okay, so that's the point here. So let me find it again here and put it into a Excel file quickly. Sorry about this, guys. Just bear with me for a minute here, because I just think you'll find this so helpful. It's a great tool to engage you and keep you true to your plan. Okay, so whatever your plan might be, you have the flexibility to do this now. There we go. Okay, so I did have to put in an Excel file. You can use your Google Sheets and export it though. Here you go. Right, so we can go through this and start to grade them as well. All right, so let's take a look in here. So we had our pullback here. Okay, we were kind of looking for that. We can collapse this here, and this was our little breakout in here, and then the sellers came right back in, right back down to bottom of the range in here, yet we're still finding buyers here. Okay, so leg one here. Now how strong is this move? Pretty good. They're curling back in already. So yeah, now if we get buyers in here based off of our criteria here, we're looking for the move back up to about here, 64.5 or 65, something like that. Okay, so what's this angle look like? Yeah, well, it's strong enough for this time frame that we're looking for. Give it an 8. Strong volume, not bad for this time frame. We'll give this maybe a 7, I guess. High angle, yep, that looks great. We'll give it an 8 or a 9. Shallow pullback, yep, that looks good too. Okay, so we'll give that like maybe a 9. Low volume on the pullback, yeah, there's one big spike here, but most of this volume in here is bind, so we'll give that maybe a 7. And then a strong initial move again. Well, we just started to see that come in here, and we're getting it again now. Okay, so here we go. We'll give that maybe like an 8. And then it averages our scores here, and it gives us our average score. So best if an 8 or higher. If it meets your criteria, now I just made this up on the fly. I haven't studied this, but it met the criteria in here. If this is good enough for you to take the trade, a number 8 on the average, then you would be in it in here, and you'd probably be looking for reducing some risk up here around this 64 or 5 area. Okay, so there you go. Right, so that's how you can use this tool. Very, very quick, easy, and there's your move. Okay, now if this is your plan, you'd be taking some profit up here. Okay, you're just looking for that move up to here. All right, so you had your criteria, or maybe you do have a runner. Maybe that is a part of your criteria. I'm looking for that strong move, and then I'm looking for taking some profit, just partial profit, and holding for a runner. Move your stop to break even, or move your stop to just about here below this little swing right here. Okay, so around 63.5 or 63.25. All right, so there's the criteria. Someone had asked on one of the webinars or commented, that's great, going through market structure and what you're talking about, and understanding how these markets work. How do you get in? Well, here you go. This one doesn't have entry in here, but you're looking for that strong initial volume to come in again. If you get that, that's your entry point. Okay, so I hope that helps you guys, and I hope you are using this tool. It'll keep you on the path, right? Instead of making stuff up, it'll force you to grade this and look for your criteria. It's such a simple thing, but it can be just so helpful. All right, let me answer some questions in here, guys. So hold on a minute. Slow down. Love having you back. It's just great. Okay, and this is just as important. Slow down. Why a trade failed? Exactly. And this is something we're going to put into this. We'll get to it once we start to create some of these other strategies in the learning center. We'll also come up with failed patterns. Okay, what happened? That'll be important to have in here. So you can see there's like 4 video, or basically 3 videos that cover this continuation pattern here. And then you have some resources in here too. You can go through a checklist. Here, this opens up exactly the same checklist that we have that in that new tool. We have this download practice file here that's based off of exactly this day here. Okay, so you can load it in replay mode and play it. And then you have insights here that you can go to Bookmap Insights and look at a bunch of different things in here, other user-generated content in here. Okay. All right. So let's see here. Any other questions? Yeah, we're going to get even better at this slowdown. I see that, yeah, you've already got your own criteria in there. This is just excellent. So love it. Alignment with context, outside edge, alignment, stops. And, we're going to be able to, I'm hoping, have kind of a different UI here. That might have some tabs, so you can have multiple setups in here. So if you see your setup that you're looking for, just click on the tab, and then you can import, export another one. It'll look kind of basically like the tabs up here for different instruments, except there'll be your setups that you're looking for. Okay, so here we noted this in real time, and we're looking for taking some off up around this 65 area. Okay, and we're just looking for that. Now, we mentioned that you can hold for a runner because ultimately we're looking for our 66 and our 70 level. But we're just talking about hitting singles here. You know, we're looking for getting in somewhere down in here and taking it up to the top of the range and taking some off. Okay, it's a rollover period. We had our criteria for that trade management. We also did mention when the webinar started, we're looking for that potential move into 66 and 70. Okay, so playing out pretty nicely here. All right, so a lot of considerations in here to put into your trading plan. All right, let me know if there's any questions in here, especially you YouTubers out there, because this was some of the comments that we were getting. Where do you get in? Well, you know, we're covering it. Okay, and now again, these aren't trade recommendations, though. You need to go back and study this. These are the concepts for the starting point for you to study. And that's really important. So because you need to develop it, you need to know that you have an edge. Once you know you have an edge, like the world's your oyster, basically, then it's just down to trade management. And that's a big one too, though. Like you know, you have to know that and follow your trade management. I mean, otherwise you can take a beautiful setup and lose money on it, and that's criminal. You know, that's why we have this this tool in here. Such a simple tool as well. I mean, the development, it just took them you know, I requested this, and a few days later I got this back. Fantastic. So anyway, it's but it can keep you on track. Liquidity marker is free as well. Yep, exactly. Thanks, Alois. Alois, you're doing a heck of a job over there, really. All of you guys are. Rob as well. Alois, your knowledge of the product is very, very high. It's really nice. Thank you. Yeah, you're basically like you know, at the level of you know, our support team as well. So yeah, really wonderful having you on the team. You too, Rob. And thanks guys for helping out. We're on YouTube here. Furthermore, talk about the team. Guys, if you're interested in this is something like it's been kind of slow in building, but we're getting there, and we're gonna really ramp up in the new year. And that is the Bookmap Academy. Okay, so I just showed you this learning center and you know, going through strategies and setups. Well, that's the foundation, plus your own setups or whatever it is that you look at and you mark up in your charts. Then we have this Bookmap Academy here. You click on the More button and go to under Community, go to Bookmap Academy. I'm bringing this up because we go through in here offering a mentorship or coaching on your content. You document your trades, you journalize your trades. We will take a look at it and we will give you feedback. If you want this service, you need to sign up for the Academy. Okay, now you go through this Academy in here because you should know what you're getting involved in. It's all free, and this is a win-win for everybody in here. This Bookmap Junior Academy is where you'll start, and you'll start by applying for it. If you make good content, quality and quantity, then you will be invited to the Bookmap Junior Academy. And then the test begins. Okay, for a month, you'll create content, and then we will evaluate it. And if it meets the criteria that we're looking for of quality and quantity, which is one screenshot per day marked up. Okay, but it has to be quality. I know that's a little subjective, but we're looking for you know, you putting the effort in, and it's easy to tell. And you're getting something out of it and learning, and you're growing as a trader. When you get there, then you can be invited into the Bookmap Academy here. It's by invitation after you pass the Bookmap Junior Academy. And then once you're in here, you continue to do the same thing, but you can get Bookmap for free. If you double your quantity in here, you can get the MBO bundle for free, or other add-ons for free. This is a heck of a deal here. And you're going to become a better trader. Why wouldn't you want to do this? It just makes total sense. In fact, we're also offering this together with the Bookmap Blue Jacket competition. So join and sign up for the competition as well. If you do, then you might win Bookmap for 3 months as you're going through the process in here. Okay, so why wouldn't you? You're going to be documenting your trades anyway, so why not get credit for it in the academy? Now, some of our traders in here have already gone through the Bookmap Academy, and they're on now to the third step in here, which is coaching. Okay, Slowdown is one of them. Jack is another, and Stan is another one as well. They are giving feedback and turning around and giving feedback to these guys in the Junior Academy, helping them, get a leg up here. And then the next step after being a coach, which you'll get data for free. Okay, if you make it to the coaching level, so you get Bookmap and data for free. Okay, you continue to meet your criteria though. And then the last step here, well, is a Bookmap Academy streamer. Or you can take it even further. Maybe you join the Bookmap team altogether. But this is the last step in the academy, at least, where you can get additional incentives here, and you'll be streaming, within our calendar. Okay, so let me show you that. It's here. If you go to the Learning Center and you scroll down here, these are all the people that are streaming with us. Doug is one of them. Okay, Doug came from the academy. Tom B, another one. He came from the academy. And also Moby was on earlier today. Came from the academy. Okay. Not him, not Trivian. I'm sorry. Moby's on Wednesday and Friday, and here's Moby. Okay, so fantastic traders, as you guys know or well aware of. They're doing great work, and streaming and helping them get better, as well as helping you guys. Okay, so really, I really like the program. I think it's a win-win if you want to sign up for that. All right, the reason I'm going over all this stuff is just kind of slow today. We did catch this nice kind of move to the upside. Funny enough, it did not trade 270. That was the ultimate target, but yeah. Anyway, this is where you can see your criteria in here on the retest that maybe you want to consider taking some profit up here. If we don't see, and it tried many times in here, you can see this little back and forth in here, and then up here as well. It's trying. There's not enough buyers. You're seeing more sellers starting to come in at the bottom edge here. So you're looking for maybe a move to here. That would be the first step. The next step here, or this one here, and that's where it's ultimately gone down to this 65 area, which was where we initially took some partial profit. We're hypothetically looking for taking some partial profit there. Okay, so anyway, good stuff there. Again, guys, we can splice and dice these all up in here. Look at your market structure. Look at your measured moves. Okay, the break from here on down. You just can't make this stuff up, right? So look for your previous swings. Look for your measured moves, and makes good sense. All right, buyers coming right back in. All right, well, where are they going to go? Well, probably up to where it kind of broke from here, or this swing here. Maybe it's already done. Maybe that's as far as it goes. So let's take a look. What's the volume look like in here? Let's look at the relative volume of this move compared to this move. Is this move here a low volume pullback after a move to the downside? No, it is not. This is not low volume. This is high volume. Okay, so we might get some back and forth in here, but I would look for this to come up higher. Here, we're at 68 already. Let's see if we can come back up to here, 69.5 or so. Okay. Again, based off of a criteria we're looking for in our, we can look at, again, some of the strong moves, pullback, strong moves, etc. Okay, was this a low volume pullback? Absolutely not. All right, in this time frame, in this structure here. Okay. So sellers are starting to come back in. And let's see if we can get buyers to come back in again, though. Okay. Now, again, this is a funny one, and I want to kind of address this one with Rob in here. God, I love it. Slow down. Look at all this stuff you're coming up with in here. Fantastic. And Rob, I know you've been doing some great work in there. I haven't seen your recent videos. I will get to them though. All right. In fact, what I want to do on these webinars moving forward is we'll go through and review a few people's pieces of content if we don't see anything really unfolding here. Kenji, let's see, you've got some questions in here. If you need someone to talk about something to talk about, you always like hearing the market mechanics. Yeah. I mean, the market mechanics, guys, like, we had, slow down, you might have missed some of these. We had some of these previous webinars based off of first principles. And to be honest, like our education, which you can see here from the Learning Center, market mechanics course right here. If you go here, this was done back in 2017 or 18. Is evergreen content though. You will see this is an older version of Bookmap with the black and white heat map. It does not matter. It is the same. It is this kind of content in here though that you can utilize over and over again, because this is the market mechanics. These are how these markets work. And we talked about these in terms of first principles. What makes the market move? What affects the market? And what is the market made up of? It is based off of orders, okay? Traders, offering and bidding, and trading, okay? Making transactions. That is what the market is all about. And the understanding these elements in here at the most binary level, very, very important to understand, like what is making this move in here. So like suppose, like here you can see a potential spoof that we're covering with a really big skewed order book on the offer. And if you start to find sellers coming in, then we're looking for potential momentum of sellers continuing to hit the bid and moving this market. Okay, so let's take a look in here. We can see some of the sellers coming in here now. Right now we're down at this swing though, and we're down where the buyers came in here. So unless we see a lot of selling in here, then I would look for the break. Okay. And yeah, it's doing it, but I don't really trust it. It's not looking quite enough for me, and I would miss that then. Okay, I would not accept the risk. Okay, in fact, I would look for maybe buyers to come back in and move it back up now after that initial spike down. Okay, so because of the day, basically, when we talk about momentum and we talk about market mechanics, and Kenji, you got me going on this subject. So the we want to understand the strength in these moves in here, because if we zoom in and we understand like really what moves the market. Okay, the aggressors move the market. They cross the spread and they can make they take the trade off of the liquidity here. Now, if there's enough sellers in here, they will meet the buyers on the bid, and if they exhaust out or they trade with all the buyers at this price level at 64, they will trade to the next level. Okay, for every seller there is a buyer, every buyer there is a seller. The difference is though is that it will sweep this price level and go to the next price level, and that's what makes price move. Right, so if that is the case and we see that there's a lot of selling coming in, well, we look for the sellers to continue to move that market in that direction. Right, so anyway, that's why we look for momentum moves. Okay, now we mentioned in here today is a condition where, like, we saw that selling coming in, but no, we're not going to, we're coming back down and it's been back and forth in here. It's rollover period. We're not necessarily looking for selling further down into this lower level here. We're looking for maybe actually buyers to start to come in from these areas in here. It is at a discount, and we know there's a lot of buyers over here. Okay, so what we're doing is looking at the market in terms of the buyers and sellers. Okay, so let's take a look. For example, this is where we find buyers. Okay, now this is where we're starting to find some sellers. Okay, so it makes sense that we will find probably some buyers here and some of these other areas here. Okay, so in fact there's more buyers in here than there are sellers in this range in here. Okay, now that said, we want to look at the edge here, the right edge here. Okay, and recent selling. Who's in control of the market? Okay, sellers are right now. There's more selling in here than there is buying. Okay, so this pullback unfolded back to where this selling began. Now we're looking for sellers again to hit down into 62 3/4. Okay, maybe they can reach down to 60 1/2. Okay, so there's our move already, and looking for it now. The selling looks pretty good. Okay, we might get a little bit bump up, back to about 64 1/4 here, and maybe we'll find even more buyers try to lift it back up to 70. I'm actually looking for a low volume pullback here, and then selling again and hit the bid into 60 1/2. Okay, based off of this recent activity in here. Okay, and what's our criteria? Well, here's the selling, here's our pullback, and here's our selling again. So we're looking for sellers to drop it. Okay, you can create another list in here based off of that. Okay, now this is based off of market mechanics and understanding, extrapolating some of these smaller ideas, or I should say lower time frame ideas in the market mechanics to higher time frames. In fact, we've always thought this, like this education here from the Learning Center in our market mechanics course is really the same ideas as these higher time frames as well. Daily, even a monthly chart, it is the same thing. Here's our strong move. Okay, here's some profit taking, or maybe some sellers that initiated up here. There may be there's some resistance up there, and then you can see kind of who won that battle in here. Buyers took it higher, right? And look how they did it. Like, it's some back and forth in here, right? But these are the easier moves, these stronger moves in here. That's why we go through that momentum strategy. All right, well, here come our sellers in here. Here's our move above the range and our sellers coming back in. Okay, so now we're going to think there's probably going to be some trap buyers up in this area. Where would they get stopped out? on this move. Okay, we'll probably be down in these wicks in here. Okay, so you can even look for even a bigger move potentially, maybe down to like 60, or I'm sorry, 46.05 or oh 06. Okay, and we're at I'm sorry, that's not, that's the new contract. Okay, old contract, I'm sorry. So yeah, that's one of the so we're looking for a 6-point move basically, right? So that would be from 63 on down to about 57 or so. Well, let's line it up here. Okay, well, I would look for the swing down here first before I look for the 57. I'd look for the move back down into about 59 here. All right, so anyway, understanding these market mechanics can be then extrapolated out to higher time frames. And that's what makes up the higher time frame market structure. Here we can demo that. And Kenji, you got me going on this. And I like it. I love the going through the these kind of first principles of markets and understanding these market mechanics. I'm fascinated by it. I mean, look at this hitting the bid here and this back and forth in here. Buyers back up above that area. Now that would be like trap volume in here, right? You'd look for a stop run maybe above that. And we do have our stops here. And we do have a small stop run up in this area here. Okay. Otherwise, we'd look for we'd look for exhaustion in here at this level, no buying, or maybe potential trap buying, and then we'd look for a move below here, and then we'd look for our selling to come in. Okay, below this kind of little, miniature high volume node in here, and we'd look for those sellers to hit the bid hard. Okay, well, we didn't get that. They came up higher and they came up to this level and that swing, and then we got the move back down. Okay, so yeah, now we've come down to our 59 level. Okay, that matches our higher time frame here. So we're still looking now. We look for the continuation. Look at the selling coming in. Okay, so let's see if we get down to this. Well, on this contract, it would be 57. Okay, at this point, somewhere around here. Let's see, Kenji, what I'm a little confused in here. See what you're mentioning. Oh, guys, and another thing too. Let me mention. I'll go over Kenji's comment in here in just a minute, and then also YouTube. See what you guys have. But we have another, rising star in here, and we had a webinar with him last Thursday, and that's Crash F16. So if you guys want to check out some of the content and some of the things he's looking at, let me show you where it is. You can go to our YouTube channel, and you'll scroll down here, Pro Trader Webinar Series. Here he is here. Okay. Yeah, it's hour and 42 minutes long. I really went through in detail what he's looking for, okay, and how he trades order flow, what he's looking for precisely, okay, in a few of his setups. Not, he didn't go through all of them or anything, but he mentioned like you should have 3 to 6 or 5 to 6 setups. I forget what you mentioned, Crash, something like that. And you in order to take advantage of the market and to make a living out of it, you have to have these setups, and you have to study them. You have to know them, and become experts at them. When they present, you take them, you execute. So Anyway, let's see, Kenji, you've been trading ES for a year now, but this is the first time you've been familiar enough to other aspects to give more thought to rollover week. Yeah, rollover week is tricky. I would really look for something higher probability and be kind of careful. Yeah, I mean, it's just, larger players. I mean, they're just doing many different things. That's why a lot of times you're just on rollover, the order flow tells us something, and then the market does something completely different. Right? And that's where we have to be really careful because we can't rely on the order flow as much because the behavior is different in the order flow. It makes sense. They're not necessarily speculating, they're rolling over. No, it's a great question, Kenji. Yeah. Oh, well, you're talking about why prices are higher. Well, I mean, it's the next, futures contract. Typically, it is higher. Contango market, backwardation market would be lower. Right? And there's all sorts of reasons for this. This is when you can also get in your, uh, the some of the notes or some of the bonds and looking at the tails and the interest rates, etc. There's a lot going on there to take a look at, and it makes good sense. Um, looking at these interest rate tails are really important to look at your bear flatteners and bull and bear flatteners and etc. All these types of things. I don't want to get into all of that. It's a bit higher time frame, but it makes good sense. Think about what do traders think the next month is worth? Well, they're telling us it's worth more in the future here. This is now at 4660. The ES here is at 4606 or oh 07. Okay, so we're talking 50 or 60 points there. Okay. All right, well, let's see here. Are we getting something here interesting? Like we're getting some buying starting to come back in here. I don't know. I wouldn't get caught up in it, but I am kind of interested. Let's see if we're at a level, okay, our 59 level. This has been a nice move down. And are we looking for a reversal? Well, let's cover that. And what are we looking for in a reversal? That's going to be the next thing I'm going to cover actually in the strategies and setups. Okay. So what we're looking for, and this is not a good example, we're looking for high liquidity on the bid to be filled, like really high liquidity. Okay. That sellers continue to hit into it. There's still more selling pressure. But what happens is instead of getting a strong move like this, it starts to slow down. It starts to kind of, you don't get as strong moves. You may still get a lot of liquidity getting filled on the bid. You may see a strong bid. Then what you're going to notice is you're going to see that instead of seeing strong selling into this area, you're going to start to see strong buying in some of these areas. You still get some back and forth in here. You may get even a dip below some of the liquidity, and then it rejects and comes back up. Okay, and then we look for more buying to come back in to this area in here and to potentially break out. Okay, you probably get one more little pullback, and then you probably get that buying coming in, and then the strong buying to lift it at that point. Okay, so it starts with the move down and understanding a lot of the liquidity in here getting filled, and then you can start to see this rounded bottom. I mean, the head and shoulders pattern, for example, you get this kind of slowdown, and then you start to see like more shallow moves. It's not as steep moves any longer. It's because there's buying and selling within these areas in here, instead of like just majority of just selling. Okay, so here's our peak down below. Okay, now what's that buying look like up here? It's not so great. Okay, but yeah, I mean, I don't really like it. Okay, but let's just go through a scenario what this might look like here. If this is going to be the head and this is going to be your shoulders over here. Okay, well, this is what we're looking for right in here. Where's our buyers? Okay, where's our strong bid underneath? Okay, supporting this. Where's our buyers? Here they are. Okay, now we're looking for the move back up to here. Right? That's the first stop. Now, reversals are tricky. Maybe it just kind of fails up here and rolls over and continues on lower, right? So, don't be very careful with your trade management. When you nail a reversal, it feels great, but it can be kind of tricky. Okay, so now we're looking at market structure being broken by the buyers, okay? And then they start to take control. You can kind of see it here a little bit. This is what we're talking about. Kind of see it a little bit here. Okay, so now we're looking for the move up to here, 61 and a quarter or a half. Okay, and then I would anticipate a pullback. Okay, probably back down to here around 59 again, and that would then show us that these are kind of like two shoulders and maybe a head here. Okay, and then we're looking for a higher low. Okay, we're looking for a higher low, but with strong volume on the buy side here. Okay, now sometimes this is what unfolds as well. Sometimes this is enough. You can go through your reversal patterns, in a book. You get these kind of 3 hits to the bottom like this, and then it just goes like that. Okay, there is no shoulder, there is no pullback. Now, how can we look for that though? How do we know about that? Well, this is one of the things to look for, is like a rejection down here around this 59 level, and really big volume dots in here. Like they're just really buying hand over fist. We get a strong move like that, we won't get a pullback. We'll likely get a continuation move. Okay, so again, looking for order flow and transactions within this market structure to support some of these ideas. Okay, so what makes up this pattern in here is exactly what we just mentioned. It's the order flow, transactions in this market structure. Okay, this is why we don't care so much about calling it a flag pattern or head and shoulders pattern. We care about understanding the volume and the order flow within this structure. Okay, and there's going to be probably some variation of that. That will, of those 3 elements, that will define that pattern. All right, so let's see here. Anything else to cover? Samar, no. It looks like yeah. The question has been answered. No, the MBO bundle, stops and icebergs, we do not have it for crypto. It is not in the digital plus, nor is it in the global plus. It is sold separately on the marketplace as the MBO bundle. It works with global or global plus, and it only works with Rhythmic data and CME group instruments. Okay, so it's a very special thing. Let me show you where you can find it. If you go to bookmap.com, and then you go to the more button and you go to the marketplace. Okay, here. You can go right to it here, MBO bundle. Okay, and then you can read about it in here. It's 134 a month, and it will show you the transactions of icebergs and the transactions of stops, okay, which we have here. Okay, in the subchart and on chart. All right. Let's see any other questions. Yeah, okay, the liquidation indicator. I'll have to look into that some more. Yeah. Yeah, please reach out to support@bookmap.com. I don't have an answer for you on that one. I also have had trouble on Friday. I could not load. The imbalance indicators up here are a little different. This is just showing you an order book imbalance and then volume imbalance. But I do agree with you, or I like what you're saying there about understanding this context between the passive and aggressive participants in here. Passive being limit orders and their behavior, as well as the aggressors, which is the market orders and their behavior, where those transactions are taking place. All right, I think we've covered that, and see any other questions in here. Yeah, we've been going through the market pulse tool and developing, trying to come up with many use case scenarios of it. That's why, like, our theme has been with the Academy and Blue Jacket is to go through market pulse, so that you guys can find new ways to utilize these tools, because there's a lot of meat on the bone here with these market pulse tools, we've rolled it out, but we're still, looking at different ways to use these tools. There's a lot of new algos in here, so you may want to. You can get free access to it at the moment. So you might want to. You have to be part of the Academy, but you can get free access to these new beta tools in here. Yeah, I have to get rid of this to clear them all. Right. Price change might be a good one today. This one's actually free. Okay, so you all can get access to this one. Okay, we'll look at price change and then create a new one in here, and we're going to go through volume, pressure, and balance, the ES. You see how we can also choose multiple instruments? This is a great new feature in here. We've covered this scenario many times, so it's nothing new. But we look for the price change and the volume pressure imbalance. Okay, so let's just hover over this one and let's see what it is here. This is the price change one. All right, so let's change the colors on the price change. Yellow as the line. This is, I demoed this the other day for you guys. And buy side. So this kind of pink magenta for the sell side. So we can now compare and contrast. So you can hear it in YouTube, like the volume pressure was just starting to hit here, because it's this line here. So we know that, right? We can zoom in here. So volume pressure is starting to hit here on the sell side. Now, what about the price change, right? This is a good study here, because you don't want to be selling that volume pressure. Now you can really hear it now. right? So here's big move, big price change, also the volume pressure. Okay, so we have both now. All right, so how do we use this tool? Let's clear our drawings for a minute. Did we come down to a swing? Okay, yeah, there we go. All right, so now both are hitting. All right, so now what you can look for, if we're looking for a move back in here, we're looking for those buyers to come back in and trade back up to maybe this swing. Okay, now this is just based off of these two scenarios in here. Okay, we've had a pretty big move. What I'm talking about here, and this is why we're covering like a counter trend trade in here, because I don't know if this is news. It probably is, and because that's a pretty big move, right? But we're looking for the move back into the range here, okay, based off of the criteria in here. Okay, we had our swing down here. Okay, now if you guys want really deep insight on this, go watch Crash's webinar. He goes through and he's looking for many different confluences. I'm just covering a couple. Okay, I'm just covering the swing, the market structure. I'm covering the price change here, and I'm also covering the volume pressure. Right? And then you can look for where this move might unfold. Now the strong move is to the downside. We know that. Okay, but this is we're covering something completely different here, based off of these three elements: price change, swing below this little range here, okay, and then and volume pressure and price change, both at extremes. Then we're looking for buyers to trade it back in, and we know that this is counter trend trade. Okay, so we're just looking for a move maybe back up into, this would be my first place, would be here, okay, because this is where those sellers came in on that second leg, or maybe the swing here. Okay, if we still get those buyers coming back in, we'd look for a full retracement back up to 62 here. But it would be these two areas here for testing to see if there's more supply up here or here or here. All right, very, very simple thing. And then you're not looking for more than that, okay, because you know that the strong move is to the downside. Anyway, some considerations in here. Market Pulse is part of the bundle. No, it is not. It is sold separately. Yeah, we can find it here again from that marketplace. I'm sorry, it's a part of the MBO bundle here. I'm sorry, I've got that wrong. You only get volume pressure as free as part of the MBO bundle, right? So the other ones in here are let's go back here to search Market Pulse. Yeah, here you go. So just like Slowdown had said, it is you can see the different prices here. There's a free one though as well, right? So like I said, it's that price change one in here. Anyway, this is the link to it, and you can find out also more from the Bookmap knowledge base in here. Okay. This is what you get in here, and there's, like I said, there's these new ones in here as well that they're not actually listed here. Volume pressure is new, but we also have some of the ones that are in beta. We have absorption and sweeps as part of it as well. Okay, so anyway, that's the place to go. You got the link there. Slowdown put in there for you. Here, I'll copy it and put it into the YouTube chat as well if you guys are interested in checking this out. Go. All right. All right, guys. Well, anyway, I think we've gone over quite a bit here for and not a actually I was not anticipating much for today. We caught some or noticed some good moves in here, which typically I struggle on rollover day, but because a lot of times it just doesn't make sense. There was some good kind of clarity today for some reason. I don't know. Go figure. But the order flow kind of played out pretty nicely today. So maybe it'll be different tomorrow. We'll see. All right, but we have low expectations on these kinds of days. Anyway, guys, thanks for coming, everybody. If you like this, please hit the like button. We want to continue to offer you high quality education, so your feedback counts. They really need to get your feedback. So yeah, please hit that like button, and then let's reconvene tomorrow. We'll see you then. Thanks, everybody. Bye-bye.